Hello, and welcome to the 2023 North Coast Ventures Annual Meeting. My name is Todd Fetterman, and I'm the Managing Director of North Coast. We are here on location at the offices of Thompson Hine, the sponsor of our last two annual meetings. As of this morning, we had over 600 registrations, which is terrific to see. Given the size of the audience, and given that we are regulated by the SEC, we'd like to take a moment to remind everyone of a few quick ground rules. If you're watching this, you are a guest at a private meeting of North Coast Ventures. Any opinions expressed are intended to be educational in nature. These opinions should not be used as a basis for investment decisions now or in the future. And lastly, this is not an offer to invest in or purchase securities. With that said, we're excited to share what we think is a great agenda. Tonight we'll share an update on our funds and the North Coast Network. The CEOs of 5 of our fastest growing companies will present 5-minute updates on their ventures. We will review the portfolio and offer select company updates. And lastly, we'll wrap up the evening with a fireside chat with Steve Glass, the CEO of Medical Mutual. In that conversation, I will ask Steve about MMO's approach to innovation and the future of healthcare technology, one of the major pillars of North Coast Ventures' investment thesis. Before diving in, I'd like to offer a few important thank yous. First, to our main event sponsor, the law firm of Thompson Hine. Thompson Hine's New Ventures Group is a longtime supporter of North Coast. They are strategically focused on representing startups and VCs across the country, but especially here in Northeast Ohio. The group represents high-growth companies of all sizes and stages in industries including technology, healthcare, and consumer products. We appreciate how the New Ventures Group at Thompson Hine contributes to the success of the startup ecosystem, and we look forward to continuing to grow that ecosystem with them in 2023. I would also like to thank North Coast Ventures' nearly 30 Innovation Council partners. By partnering with North Coast, their sponsorship helps drive our community events and contributes to the growth and success of our portfolio companies. I'm going to call out 2 logos here. The first is Jumpstart, a longtime supporter and financial partner in the management companies of the first 3 seed funds. The second is the Ohio Development Services Agency. This is a group that oversees the Third Frontier program, which across 6 funds has provided almost $25 million of matching capital. We would also like to thank the investor members of North Coast Ventures. We are deeply appreciative of their support as investors and their commitment to engage in our process, share industry expertise, and leverage their networks to help build successful startups. Lastly, we'd also like to thank the more than 1,000 team members of our portfolio companies. Their talent, energy, creativity, and perseverance is what we truly invest in. Every day, these teams work to build great products, acquire customers, raise capital, and grow their companies. Looking back, we are humbled by their efforts and the results they have achieved. Daniel will talk more about some of these success stories shortly. With that, let's talk about 2022. 2022 was a huge year for North Coast Ventures, with more portfolio company revenue, more companies raising capital, and importantly, more companies achieving exits than any prior year. In total, North Coast companies generated over $400 million in revenue, with 8 of these companies surpassing $10 million. Over 25 of the companies raised capital in 2022. These rounds ranged from Series Seed to Series D and showcased the potential of a broad set of our portfolio. Also a record, North Coast made distributions to investors related to exit events from 6 different companies. Highlights include Able selling to Bullhorn, the global leader in staffing software, Standard Bariatrics selling to publicly traded Teleflex, and OnShift receiving a significant strategic investment from ShiftKey, a unicorn whose platform helps healthcare facilities fill open shifts. Exits were also achieved for Performex, Complion, and I2C. Initial distributions for all 6 transactions were completed last year, and specific details are available in our secure investor portal. 3 of these exits have earnout components, so we anticipate additional distributions for these transactions in 2023 and beyond. We began the year investing out of 2 separate funds, our $15 million Seed Fund 4 and our $24 million Acceleration Fund 2. In Q3 of last year, we held the first closing for a new fund, Syndication Fund. Syndication Fund reflects the same approach as our last 2 seed funds, but with expanded geography, targeting investments in high-growth, seed-stage business software companies across the country. The fund builds on Seed 4's 3 out-of-state investments and is made possible by North Coast co-investor relationships with 100 national VCs angel groups, private equity firms, and family offices. Syndication Fund is off to a great start with our first 3 investments in Because Intelligence, an e-commerce solution to accelerate sales for Shopify vendors, Itility Health, a health tech company focused on prior authorization, and Cloverpop, an AI-powered decision-making software platform. The new syndication fund has also attracted many additional investors to North Coast. Our investor group now exceeds 400 people and is the most significant asset we bring into 2023. As the country's largest single-chapter fund of engaged early-stage investors, the group includes over 50 successful startup founders and technologists and over 100 members of the corporate community. That brings industry expertise and functional expertise to bear. This is what differentiates North Coast. And perhaps most importantly, this network has proven ready and willing to open doors on behalf of our portfolio companies. Several examples include actions that have led to Progressive Insurance becoming a customer of Remesh, Joann Stores becoming a customer of NaviStone, Oswald becoming a customer of TPA Stream, Morgan Stanley becoming a customer of Performex, Standard Bariatrics establishing relationship with Cleveland Clinic. While we can leverage the North Coast network through virtual engagements, there is no substitute for getting together in person. And in 2022, we were thrilled to hold 6 in-person events, including 3 investor insight sessions at Talent Launch, multiple happy hours sponsored by Markham and Compass, and our summer barbecue at John Carroll, which will also be the host of our 2023 summer barbecue. The full event calendar for 2023 is a mix of in-person and virtual events. The schedule has been shared with investors, with additional updates coming soon. One of the ways we acknowledge the contributions of investor members is with our annual Member of the Year award. This year, we are excited to honor an investor who has made significant impact on our funds, Tim Reynolds. As many of you know, Tim was the founder and longtime CEO of Tribute, a SaaS company in the industrial distribution ERP space. Tim built and grew Tribute, and in 2021 sold it to the private equity firm Valaris, where he remains active with the firm's M&A team. Tim has been a North Coast investor since 2016 and has made a big impact through his service on the investment screening committee and multiple diligence teams. Perhaps most importantly, Tim is also a board director for 2 of our companies, Besleo and Streamo. We thank Tim for his valuable contributions and are thrilled to name him as our Member of the Year. And although we have only 1 Member of the Year, we wanted to call out a handful of others that made significant contributions to North Coast and our portfolio. These contributions included high-impact door opening, mentoring, and hands-on engagement. Before handing off to Daniel, I'd like to take a moment to talk about the state of the early-stage investing landscape in Ohio and beyond. The current economic environment is dynamic in a number of ways. Inflation and interest rates are higher than we've seen in decades. Fighting inflation brings increased risk of recession. Geopolitical conflict looms large. And very recent developments within the banking industry have been a wake-up call. While there is not enough time to take a deep dive in this forum, much of the story can be seen in this slide, which is the 3-year performance of the Bessemer Cloud Index, a separately tracked set of cloud technology companies. The starting point is March 2020, the onset of COVID. The bounce in tech stocks was massive, with clear overperformance relative to the main indexes. As we all know, the market stalled in the fall of 2021 with disproportionate losses in technology companies. In response to inflation, from March of 2022 through March of this year, the Federal Reserve has raised interest rates. As shown in this chart from PitchBook, the economy and public tech environment has impacted the number of deals and the valuations of private tech companies. That said, the impact was smaller for companies away from the coasts, where mega rounds, sky-high valuations, and high burn rates are less frequent. Factors such as increased interest rates, though not desirable, have a much smaller impact at the early stages. It's important to note that we are recording this on the afternoon of Monday, March 13th, 1 business day after the FDIC stepped in and almost exactly 24 hours before the annual meeting. Between now and then, and surely between now and when many watch this video, there will be additional developments in what has been an extremely fluid situation. To recap, over the past week, news emerged that SVB was selling assets at a loss to create needed liquidity for its deposits. This caused broad concerns and led some deposits to be pulled, which led to more concern and lightning-fast run on the bank. The bank was shut down Friday, and on Sunday, Treasury announced that the FDIC would guarantee and make available all deposited funds, not just for the insured amounts. All things considered, this is a very positive outcome. At a high level, 10 of our active companies have a relationship with SVB, from deposits to venture debt to debt service accounts for other lenders. Deposit levels range from mid-six figures to over $20 million. Due to the intervention over the weekend, all companies now have access to their deposits. There will be a time, as well as many books and case studies, to dig into the what and why. For now, the key thing for most startup management teams will be assessing how the broader current environment and the market-specific dynamics are likely to impact their near and mid-term plans. We've been in touch with portfolio companies and boards over the weekend to share our perspective, and will continue to stay close to them. These are dynamic times, but we have many reasons to be optimistic. Times of change offer startups several advantages over incumbents. They can move faster, be more flexible, and employ greater levels of focus to best position themselves to be successful in the emerging environment. We remain very bullish on our focus area of business software. This model is very attractive and is here to stay. Deal pricing and terms are very reasonable. Away from the coasts, the highs aren't quite as high and the lows not as low. We find ourselves with good options and good opportunities. And lastly, there are some terrific teams within the North Coast portfolio, so we see continued success for 2023 and beyond. To allow for a full dialogue on the current environment and mitigation strategies, we'll dedicate our next Investor Insights Series event to this topic. Please keep an eye out for this event, which we think will be of interest to a broad set of our investors and entrepreneurs alike. As we look forward, I'm pleased to pass the baton to Daniel, who will talk about our fund's investment activities.
Thanks, Todd. Hi, I'm Daniel Luketic, the Director of North Coast Ventures, and I'm excited to summarize our investment activity and portfolio headlines from 2022. As I do, our ask of each of you is this: if you think you could assist a company, please reach out to our team. Every connection to a customer, investor, advisor, or employee is valuable and appreciated. In 2022, we completed a number of initial investments in companies that are new to the Seed 4 portfolio, deploying roughly $1 million into these 5 companies. You're about to hear a little more about Bloomfilter in a minute, but I'd like to briefly introduce the other new portfolio companies now. Starting with Wisest, which is nearing its public launch and has secured a partnership with the Cleveland Cavaliers. Wisest is an investment platform that democratizes access to financial experts. Data Anchor is led by a Columbus-based cybersecurity expert and has developed a unique data security solution which provides seamless encryption, data governance, and access control. StrongSuit was one of 10 companies accepted to participate in the Techstars Anywhere program in 2019. They offer a tech-enabled service for busy employees to clear their home and personal to-do lists. Finally, Real-Time Intelligence provides a supply chain visibility software platform. RTI supports a number of global market-leading customers, including IFCO, which is the world's largest plastic reusable package provider. We also completed a number of initial investments in companies that are new to the Acceleration 2 portfolio. We deployed $4.5 million into these 7 companies via initial investments. Although they are new additions to the Acceleration portfolio, each of these companies has received investment from one of our seed funds, with the exception of Society Brands, who you'll hear more about later on. Finally, we completed follow-on investments in these 15 portfolio companies across the Seed 3, Seed 4, and Acceleration 1 and 2 portfolios. We deployed nearly $4 million via second and third checks into these companies. Next, I'm excited to introduce 5 of our portfolio company CEOs that will share brief presentations that are mostly focused on what their companies do, traction they accomplished over the previous year, what's up next, and how we can help. Before I do, I'd like to briefly summarize our portfolios after another active year of new and follow-on investments. We are currently managing 4 seed funds, 2 acceleration funds, and our syndication fund. Together with our investors, we've deployed nearly $100 million into more than 75 companies to date. Our management team and members that serve as board representatives and advisors are working closely with these active companies to drive growth and an eventual exit. With that, I would like to introduce our first company presenter, Amanda Epp, the CEO of ScriptDrop, a Seed 4 and Acceleration Fund 2 company.
Hello, I'm Amanda Epp, CEO of ScriptDrop. ScriptDrop's mission is to solve a major problem in healthcare, prescription abandonment. One that likely everyone here has faced in the past, but yet we can get a cheeseburger delivered to our home, but not a medication that is needed to keep us healthy or maybe save our lives. ScriptDrop exists because this problem is much bigger than you would think. 81 million scripts were abandoned at the pharmacy in 2021. Almost half of those scripts were $0 to low copays. So pricing, like most companies are trying to solve, might not always be the issue. Social determinants of health and stigma contribute even more to medication adherence. This means that when the doctor, the pharmacist, the pharmacy tech, and everyone puts so much effort and work into getting the patient on therapy and dispensed, that half of the time the drug is abandoned completely in 72 hours. This is a major problem in healthcare and has often been ignored until now. Most of ScriptDrop's team hails from the Columbus unicorn, Cover My Meds, where this challenge was familiar. So, how we went about solving it was through our experience in building networks, integrating into the workflows of healthcare professionals, and above all, creating an amazing culture and place that people want to work to solve meaningful and impactful problems in a complex industry. So, how did we solve the problem? ScriptDrop knew that transportation and inconvenience was likely an issue for these patients, in a sense proven it in a study that we later did. So we built out this massive network over 5 years. This means we've integrated into over 11,000 pharmacies, including retailers, specialty, health system, and independent pharmacies. We integrate into their pharmacy management systems, their patient applications, and their existing workflows. These integrations connect pharmacies through our technology to over 7 million drivers across the US, giving all of our pharmacies the opportunity to get any patient on therapy the same day. This strategy has allowed us to bring medications to the homes of over 10 million patients across the country, which is a major difference between other strategies in the market, which either deploy their own pharmacy or their own courier network, and limits the growth in patients that they can help. ScriptDrop is really proud of the major milestone we achieved in 2022 of hitting 10 million deliveries. We continue to do over 1 million deliveries every quarter. In 2022, we announced some exciting partnerships that really show that we're not only a delivery company, that the problem we're solving matters to every stakeholder in the patient's journey. We work with companies that interface with pharmaceutical manufacturers, as they have an incentive to ensure there isn't a sunk cost for their medications. Health plans like Clover Health are incentivized to keep their patients healthy and out of the hospital. And University Hospitals is a great partner as well as an investor. They are our 10th health system where these pharmacies are now able to keep the script and the refills with their pharmacy. So, in conclusion, first, we want to give a big thank you to North Coast Ventures. We are so honored to be here, as well as thank you for connecting us to our incredible board members, Mike Bukach and Doug Weintraub. Additionally, Todd and the team have continued to make great connections over the years. Finally, what we would love your help with is actually more connections to our last big retailers needed in our network, CVS, Walgreens, and Walmart. We're also expanding our technology team and are looking for an engineering manager as well as staff engineers to join the ScriptDrop team. Again, thank you so much for your support. That concludes our update. We appreciate the invite to present and can't wait to see what is in store for 2023. Thank you, North Coast, and back to you.
Thank you, Amanda. Next up is Axuall, a Seed 3 portfolio company led by serial entrepreneur Charlie Lougheed.
Hi, I'm Charlie Lougheed, CEO and co-founder of Axuall, and I'm thrilled to talk about the company. We formed it in 2019, and it's already addressing the biggest challenge in healthcare today, workforce optimization. Optimizing clinical workforce capacity, efficiency, and quality are the top priorities of healthcare leaders in the US today. At the same time, the past 3 years have been among the most challenging in the history of the sector. This has made workforce analytics, planning, and management critical functions of survival in this new landscape. There are 16 million healthcare workers in the US, about 59 million worldwide, and salaries across the US have grown to more than $1 trillion a year. The pressures of the pandemic, evolving attitudes, and workforce shortages have driven high burnout and turnover, resulting in upwards of $68 billion in unanticipated premium labor costs. And when it comes to its workforce, few sectors are worse optimized, all while demand for services and expanded delivery channels keep growing. Axuall is a data company. We provide real-time clinician data and analytics that help healthcare systems and organizations optimize their workforce supply chain. Our technology enables them to analyze their clinical populations, recruit, credential, and onboard them with precision and speed, and accelerate revenue while reducing premium labor costs. We built a national data network linking clinicians, healthcare systems, staffing firms, digital health companies, and payers to over 6,800 data sources and verifying entities. With coverage for over 5.7 million clinicians, the technology enables physicians, advanced practice providers, and nurses to manage their digital resume and credentials, reduce their paperwork burden, and create career-long engagement with our platform, regardless of where they go to work in the future. And with continuous data flows, healthcare organizations can use this information to shape their care networks while dramatically reducing activation times. Healthcare is a large market, and is where Axuall continues to focus all its energy. Of the 5 sectors within it, our focus thus far has been on large health systems, staffing firms, and digital health companies. However, in 23 and 24, we plan to expand into health plans, pharma, and life sciences, particularly as we expand our product line and partnerships. From a bottoms-up analysis, we estimate the digital credentials TAM in North America to be about $2.2 billion alone. As our products and services extend into a broader workforce analytics market, where matching is capable, we expect the aperture on the TAM to expand upwards of $8 billion. While the past 12 months have been extraordinarily hard on our customers, we've managed to grow. Our business model is based on a multi-year data subscription covering clinicians across an enterprise. We've grown contracts to 315% increase over the past year. We're also proud of our market customer growth metrics. Our commercial contracts now cover over 48,000 clinicians, and we've seen 0 churn across our customer base, which we're grateful for given the space and climate. Our product coverage for over 5.7 million clinicians means that we have the opportunity to expand across our existing customer base and chase new ones in 23. Lastly, we always welcome your help. We sell into the C-suite of healthcare organizations. So if you have friends, we'd love some introductions there. We're also continuing to grow our team. While our hiring growth rate is not expected to be as high in 22, we have key roles across the company that we need to fill. So if you know great talented people with strong records, please send them our way. I just want to close by saying thank you for your support and investment over the past few years. Your support really does mean the world to us. We're excited about the future. Thank you.
Thank you, Charlie. Next, I would like to invite Faris Gawi, the CEO of Vytalize Health, to share more about their 2022, a year in which they achieved a number of incredible inflection points. Vytalize is a Seed 4 and Acceleration 2 portfolio company.
Hi, everybody. Thank you very, very much for inviting me and Vytalize here to present. I'm Faris Gawi. I'm the CEO and co-founder of Vytalize Health. And we're really grateful for the opportunity that Todd and North Coast Ventures offered us to come in here and tell you about Vytalize and give you the update of what we've been up to over the past year. For those of you who don't know, Vytalize Health is in this healthcare business. We help focus our care on senior patients. We work with doctors' offices to help them transition their care models from a fee-for-service, where they get paid for services, to a fee-for-outcome, where they get paid for providing better care and generating better outcomes for their patients. We help doctors do this for different payers, including Medicare. We bring them a lot of technology and data and capabilities and support to help them make that transition into this new care delivery system that helps them better care for their patients, helps them do better and survive more as an independent practice, and helps the entire healthcare delivery system be more efficient. We're really excited as our mission and vision are kind of becoming a reality here as we're seeing a lot of growth and success over the past 12 months. We've grown our team incredibly, a lot of really highly talented people from all across the healthcare industry and across the country that have joined Vytalize to join us in this mission to transition practices to value-based care. We've also seen a tremendous growth in the number of providers we work with. We now work with more than 2,500 primary care providers across the country, and helping them be leaders in this new model of care that we all get to benefit from as patients ourselves. Again, tremendous growth in the number of practices, number of people we work with. Vytalize now has 250,000 lives at risk, where Vytalize takes risk on the total cost of care for that patient population and the quality of care for that population. And we recently completed our Series C funding that you may have seen in the news recently. We just raised another $100 million, which brings the total capital of Vytalize has raised to date to $180 million. This is a tremendous opportunity and responsibility that gives us the ability to execute again on all this growth and the vision that we have, and that you as North Coast Ventures has supported early on. We are also really excited that our growth within Ohio is tremendous as well. We've got an incredible partner with Domes in Ohio, and we're managing a large number of senior population with them, and working together to identify ways that we can deliver better care across the healthcare system. So these are really, really exciting times. A lot of activity in our space, a lot of acquisitions and mergers, and a lot of action. And we believe Vytalize is poised to be a leader in value-based care delivery in this really exciting transformation that's happening to our healthcare industry. The next couple of years are going to be also a lot to do, and not going to be short of challenges. We feel like in many ways we're just getting started here. We are focusing heavily on building out our technology. We're focusing heavily on building out and integrating with the rest of the downstream network as well. So it's not just primary care, but working with leading specialty groups, leading hospitals, leading ancillary providers to see what else we can do to optimize care delivery, in Ohio and across the country. And we wouldn't be Vytalize if we didn't take this opportunity to ask for your help and your continued support. We're hiring, we're looking for a lot of great talent for a lot of open positions. So if you know anybody that's looking to get into healthcare, or is in healthcare, looking to make a move, we love referrals. They're always the best way to get incredible talent here. And just if you're in healthcare and you're interested in what Vytalize is doing and how we may be able to benefit your organization, we always welcome forward-thinking partners that are looking to adopt value-based care and make a better healthcare system for all of us. So that's it. Quick update. Thank you again so much for the invitation. Really grateful for all of you and for the exciting work that you do, for us to be able to be a part of it. So thank you very, very much, and hope to bring more good things to come.
Thank you, Faris. Next, I would like to invite Larry Kavanaugh, the CEO of Seed 3 and Acceleration 1 and 2 portfolio company NaviStone, who will share how the company performed last year, and more importantly, what's to come.
Good evening. I'm Larry Kavanaugh, the CEO of NaviStone. NaviStone was founded in 2016. We're a new type of marketing technology platform. Now, like a lot of digital marketing technology platforms, we use powerful signals of digital intent, like whether someone browsed a website or what other websites people are browsing, to determine who are the best prospects for our customers. But unlike the traditional digital marketing platforms, rather than using digital display ads and emails to communicate with those prospects, NaviStone uses daily direct mail that is personalized based on what someone browsed. Now, why would we do that? Well, you might have noticed that in today's digital world, there's a lot of overload. The average consumer sees several thousand digital ads a day. They receive several hundred emails a day. But their traditional mailbox, their traditional USPS postbox, only has about 2 pieces of advertising mail in it a day. What's important about that is it's a less competitive environment for our advertisers, and it tends to be a postcard or a piece of direct mail that we send sticks around the house for several days. So, pixels on a screen are gone in a second. Ink on paper hangs around for days and continues to produce for our advertisers. So how do we know this works? Well, first of all, we have case studies from more than 100 advertisers where they have where we've shown and they've proven that this actually produces better metrics than traditional digital advertising. Now, the fact that people write case studies is good, but how we really know it works is that NaviStone's growth has been phenomenal. We're in our 7th consecutive quarter of growing somewhere between 50 and 70% year over year. Now, you might have read that digital marketing has been struggling lately. Google has reported declines in year over year digital advertising, as has Facebook. But NaviStone is continuing to grow rapidly. We've actually reached 14 million in ARR. So how is it we've continued to grow? Our results are certainly one piece of that. But really, it's our ability to expand customers, for customers to grow their business with us. That's the key to our success. The chart that you're looking at shows that the customers who started with us in 2018, for example, spent $609,000 in 2018. In 2022, that same customer cohort spent more than $1.7 million. And that's really the key to NaviStone's success, is our ability to grow and expand customers after we land them. So what's new with us? Well, 2022 was a big year. We grew our team from about 26 people to 47. What that allowed us to do is, first of all, grow our new business development team from 2 to 4 people. It also allowed us to add a brand new product. So we started primarily using the remarketing signal, the fact that someone visited a website and left, as the trigger to send a piece of direct mail. In 2022, we added a new signal that is essentially, we call a lookalike audience. These are folks who have browsed other sites, so not our client site, but browsed other sites, but they've browsed other sites that look a lot like the site that our customer owns. We've found that this product works really well. You can see some of the stats about how it's done. And finally, we added a new go-to-market strategy. Historically, we've always sold directly to companies, to mid-market, to enterprise companies. But in 22, we created an interface that allows agencies to actually create their own campaigns using the NaviStone platform. So they're setting up campaigns just like they would set up on Google, on Facebook, and set up email campaigns. So we've got a plan, with these new strategies, we've got a plan to grow NaviStone to over $100 million over the next 5 years. Really 3 keys. 1, continuing to grow our sales team from 4 to 7 folks. Number 2 is to roll out those lookalike audiences to existing customers. We think the lookalike audiences have the potential to more than double our revenue from existing customers. And finally, to roll out our agency platform. There are 15 to 20,000 digital advertising agencies that we think would be able to use our platform in the US, which gives us a huge total addressable market. So how can you help? Probably the best thing you can do today is make more intros to digital agencies for us. This year was our first year having this agency program, and actually it was North Coast who introduced us to the agency that turned out to be our most productive in 2022. We'd love to have 5 or 10 more agencies like that. That would be fantastic. Thank you for giving us that one, but we'd love to have more. And also, thanks for your support over the years, helping us build NaviStone to the place we are today.
Thank you, Larry. Finally, Eric Severinghaus, the CEO of Seed 4 portfolio company Bloomfilter, will describe the company's fast growth since our investment in mid-2022.
Hi, I'm Eric Severinghaus, co-founder and co-CEO of Bloomfilter. I want to start by thanking everybody from North Coast Ventures. North Coast Ventures, Todd and the rest of the team, you guys have really been there since day one for us, and I can't tell you how much we appreciate your support. You know, in 30 years, the questions around software development really haven't changed much. If it's your job to report to the board or to the executive team around the software development that's happening within an organization, you generally get asked the same three things over and over and over again. What are we building? When will we have it? And how much is it going to cost? It's really that simple. Everybody wants to understand those three things. But in 30 years, despite the fact that the process around developing software has transformed, the tool set around developing software has transformed, it's not any easier. And in fact, it's arguably more difficult to answer those three simple questions for your business stakeholders. And because of a lot of the challenges around the complexity of that process, we get to some really bad outcomes in software development. In fact, despite the fact that $108 billion is going to be spent in North America this year on software development, we know that 78% of those projects will ship either late, over budget, or they actually just won't ship at all. And in fact, 85% of expensive developer time is spent on tasks other than writing code. Is it any wonder that 94% of global executives are frustrated with their company's innovation performance? Now, we think at Bloomfilter this exists because of a huge gap in the market around the need for a system of intelligence in the way that software is developed. In a typical software development lifecycle, there's about a dozen different tools, from how things are ideated, how roadmap is prioritized, how prototypes are built, how code is ultimately checked in and checked out, how it's tested, and how it's ultimately deployed. And there's no single system that allows visibility across all of these systems of record. That is what we're building Bloomfilter to do. We are the first process mining tool for software development. What this is going to allow us to do is gather data and metrics from a variety of different systems, provide visibility for executive stakeholders, and surface content that's relevant to those stakeholders through artificial intelligence and other algorithmic learning and dashboards that are really intuitive and easy to use. We have a financial view. So for the first time, you're able to understand things like, what are we spending in CapEx versus OpEx? What are we spending to keep the lights on versus building new features? And are we getting more or less efficient over time? We also have views into the portfolio health, so you can understand which projects are most at risk and which have the most challenges associated with them, and how we might be deviating or able to better adhere to industry best practices. And then there's a sprint level analysis that gets down into the details and the nitty-gritty to understand the current state of a given sprint in real time based on the operational information and what risks might be associated with those sprints. Now, as we start to bring this platform to market, we're having a lot of exciting things happen. I can't tell you some of the newest news because it's still confidential, but I can say watch this space because there's going to be some very exciting fundraising news coming very soon. As we're doing that, we're also beginning to onboard our first customers. We've already onboarded a handful of them, and they're already starting to see value in the platform. As we get more and more feature complete, and as we move towards version 1.0, towards the end of April, we expect to be generally available and out in the market. So how can you help? Well, North Coast Ventures has already been tremendously helpful, and we certainly do appreciate that. But there are some very specific places where we could use some more help. The first, no surprise, is around customer introductions. We are looking for introductions to CIOs, CTOs, and CPOs who are forward-thinking and interested in making their organization more efficient. In order for these to be valuable, these folks need to have about 30 to 300 engineers within their organization, and they need to be using Jira and Agile around how they develop software. If you don't know what those things mean, you can just ask them. And as long as they say, yeah, we're using Jira, we're using Agile, and we have 30 to 300 software developers, it's probably a really interesting fit for Bloomfilter. The second thing that we need as we grow is employee referrals. We need front-end developers who know JavaScript and React. We need back-end developers who know Python and Django, and we need a UI UX leader. Now, we're emphasizing quality over quantity as we bring these core teammates on board. So we're really looking for very targeted, top-level talent that we can engage with, and would appreciate anybody that you might happen to know. The third is more broadly and strategically around business development connections. There are some interesting routes to market that we're exploring, and we'd love it if you have folks in your network who are Agile coaches, who may run application development consultancy, so folks that are doing application development in an outsourced way for other companies, and then private equity firms that own a number of software companies, which we think is a really interesting target for some of the capabilities that we're building. Once again, thank you very much to Todd. Thank you to North Coast and the entire team. We appreciate your support, and we look forward to continuing to engage with you. Thank you.
Thank you, Eric. Now, let's move on to headlines from the broader portfolio over the past year. We have a number of other portfolio companies that appear to be on a path to a successful exit. I will share brief headlines related to a handful that we are really excited about. Starting with Society Brands, Acceleration Fund 2 co-led the company's $10 million Series A in June. Society Brands is an Amazon aggregator with a unique technology and acquisition strategy. They've raised over $200 million of debt capital for acquisitions and have now acquired 8 brands with an annual revenue run rate of over $50 million. A Series B fundraise is underway. Next is Remesh. Their platform delivers the benefits of focus groups with the statistical significance of larger scale polling. Amplifund is led by a seasoned CEO and provides grants management solutions. The company grew ARR to $7 million last year. They have over 130 customers and 77 employees. Their last equity and debt round is expected to carry the company through to exit. Satalytics had a breakout year in 2022 with nearly $10 million in sales. They provide a geospatial analytics software tool for companies in a variety of industries. Notably, they've secured several large customers such as BP and Duke Energy. This was a significant year for LeaseCake, which offers a lease administration solution. They completed a $12 million Series A round and entered Gartner's Magic Quadrant as a best-in-class solution. They also doubled ARR while adding several notable customers. 2022 was also a big year for Alvier. Alvier is an embedded fintech company and the first provider to be fully licensed in the US, and closed some additional financing from Silicon Valley Bank. Alvier doubled their revenue while progressing with the rollout of Boost Mobile's OmniMoney brand and announcing that the largest non-food retailer in Mexico is a new customer. Finally, although Thrivable's ARR acquisition slowed in 2022, the company still touts a number of very large customers, including Medtronic and Tandem Diabetes. They provide a real-time market research platform enabling organizations to conduct surveys, interviews, and focus groups with on-demand panels. They're set to close a $4 million Series Seed round in Q1. As I wrap up with our portfolio headlines, I'd like to remind our investor members that a detailed report, including a chart like the one shown here, along with a written narrative about the progress and significant updates related to each portfolio company, can be found on the member portal. This example chart shows the overall composition and performance of our Seed 3 portfolio. And with that, I'll turn it back over to Todd for the Fireside Chat.
Thanks, Daniel. We've shifted the conversation to the headquarters of Medical Mutual and are pleased to welcome Steve Glass, the CEO. Steve joined Medical Mutual last year after serving 17 years as the Chief Financial Officer of Cleveland Clinic. Medical Mutual operates at the intersection of insurance, healthcare, and technology, a very dynamic space. Given North Coast's interest and history of investing in healthcare IT and digital health companies, we're excited to talk to Steve about recent developments in the space, as well as some of the secular trends driving the need for innovation. Steve, welcome to the Fireside Chat.
Thanks, Todd. It's a pleasure to be here.
Well, we're thrilled to have you with us, and I'll start with a little bit of context. Healthcare has been around for a while, thousands of years. However, the idea of healthcare insurance is a recent phenomenon, really only 100 years since the initial patients were paying 50 cents a month to the Blue Cross Blue Shields to have the ability to go into the hospital if and when they're sick. In that time, we've seen the emergence of Medicare in the 60s, HMOs in the 70s, and more recently, a massive healthcare infrastructure, which now has over 18 million healthcare workers and a $4 trillion spend each year. That spend goes across large hospital systems, independent physicians' practices, emergency medical centers, as well as telehealth. So it's a very, very dynamic space. And as you look at the role of Medical Mutual as a health insurer, how do you see interacting in that dynamic ecosystem, which is still pretty nascent, having only emerged 100 years ago?
Well, you talk about 100 years of insurance. We're sitting here in the headquarters, and MMO's been in this building for 75 years. So clearly a big position here. in Ohio and Northeast Ohio as an insurer. You know, I've been in healthcare for 34 years on the provider side. You mentioned at the clinic for the last 20 years. So I've dedicated my career to the healthcare profession. Coming over to Medical Mutual and insure was a big decision a year ago, leaving the Cleveland Clinic after a great career in a place I love very much. But it was an opportunity for a new challenge, and it fits into, you know, the question you're asking as well, because sitting on the provider side, I see a lot of opportunities of how providers and insurers could work better to take care of the communities. And that word community is really important to Medical Mutual, because if you look at the markets that we serve, we are part of the community. It is a mutual company. So it's a for-profit company, but it doesn't have shareholders. So its value is very similar to where I came from, the not-for-profit world, of how do you reinvest in the mission of the organization. So I'm very interested in how Medical Mutual can be a part of that transition. You know, it's not just the United States, but having worked at the clinic, I had the pleasure of working globally and building health systems in other countries. The challenge of healthcare is not a U.S. Alone challenge. It's everywhere. You look at the challenges in the Canadian system, very familiar with the UK system and the challenges in the NHS. And what everybody's grappling with is the rising cost of healthcare. And this goes to ultimately our consumers, the government entities, the employers that bear the cost, the patients, the members, the employees themselves that bear the cost as well. So we have a tremendous challenge that we need to meet of how do we manage this, and how do we make sure that we also deal with a lot of the issues with access and coverage. And as an insurance company, when we start talking about access and coverage, that's a key part of our mission. How do we create networks and then coverage products that allow employers and members to have access to that care?
Terrific. Well, one of the things you mentioned there is cost, which is obviously top of mind for a lot of people across healthcare. And one of the potential solutions that's been talked about is a shift from fee-for-service to value-based care. In a moment, we'll talk more about one of our specific portfolio companies, Vytalize, which is in that space. But I'm curious what your sense is for how that is working today, where it's at in its transition, and what might be next.
Yeah, it's, if you go back 10, 15 years ago when we really started talking about value-based care, I think we all would have guessed that we'd be much further along today than where we actually are. So it's been slow in the uptake of that. And I think it's because there's a lot of challenges of how you actually build that into the model. But obviously shifting to value-based care as opposed to fee-for-service or just volume-based care is certainly the right thing to do. But how do we make sure we have the right alignments? How do we make sure we have the right connectivity? Healthcare is local, and healthcare is a cottage industry traditionally. So, a lot of people don't understand there's a lot of pieces that aren't connected inside of there. And that can create a lot of misalignment. Historically, our healthcare system and the system for financing healthcare has been based on paying for services. So it's a volume-based model as well.
Absolutely. And consumers are now coming to experience value-based care, not just in large hospital systems, but in their independent physician practices via companies like Vytalize Health, which is this year realized a tremendous scale across a number of states and systems. And I'm curious, as you think about how a insurer supports accountable care organizations and direct contracting entities with programs that apply specifically to seniors, how your view on that is evolving and what the opportunity for innovation might be.
Well, one is, I've been here at MMO for 7 months, so still trying to build out the strategy for MMO. But value-based care has clearly got to be a key part of that strategy. As you talk about seniors, for MMO, where we really interact with those seniors is in our Medicare Advantage products that are out there. Obviously, with Medicare ACOs, where Vytalize might provide that accountable care, they deal with that contracting directly with Medicare from that perspective. However, through all of our Medicare Advantage plans that we have out there, really trying to figure out how we manage the value of that care is a key component of it. It's how we're actually measured and rewarded with Medicare. I'm happy to say that MMO has 2 5-star CMS plans, which is a very rare thing to have. in the Medicare Advantage space. Both our PPO and our HMO product are 5-star plans. So certainly represent the strong performance of our plans. So we want to continue to invest in that and continue to grow that.
Very good. One of the other companies we heard from earlier was ScriptDrop, which has a product that helps ensure adherence, that the right drug gets to the right person at the right time and can be taken in the right dose. Adherence is something that's gotten a lot more focus from both providers and insurers. And curious to get your sense on the value proposition to a medical mutual and what kinds of investments of time and energy you might put in over the next several years to driving adherence, whether it's through partners like ScriptDrop or many of the other companies that provide visibility into what happens after a patient picks up a prescription.
Yeah, I think, in healthcare for years, we've seen drug adherence as a key challenge. A lot of the repeat individuals in the ERs are the result of non-adherence. They end up in the ER, they get a script for a multitude of different reasons. They may not, stay with that script, and then they're back in the emergency room, in the most expensive setting. And some of those are just examples of where drug adherence can really help manage those chronic conditions. When you and I were meeting a couple weeks ago, you were explaining ScriptDrop to me as well, which, sounds like a great business to help with that adherence. Here at Medical Mutual, we've made a lot of investments in our pharmacy department here at Medical Mutual, recognizing how important those appropriate pharmaceuticals are for the care of our members as well. We partner very closely with Express Scripts. They have a product called ScreenRx that we partner with, which really use data to identify when there is an adherence and how do we then get involved with the member and try to make sure that whatever might be impacting them, and something like your product, ScriptDrop, could be a solution to that as well, because I think you guys focus on how do you get the drug actually to the patient.
Well, Steve, you touched on a number of the current dynamics earlier, and the evolution of healthcare really has seemed more rapid than any time in recent memory. COVID has accelerated a number of secular changes, including the emergence of telehealth. We've seen nothing short of a crisis in healthcare staffing impacting not just hospital systems, but really every piece of the healthcare system. Baby boomers are aging and consuming more and more of these services. So I'm curious from your perspective, as you look at investments in technology and broader innovation, what you're most excited about to tackle some of these challenges.
Well, Todd, certainly the last 3 years have been incredibly challenging. Sitting in the seat from the provider perspective, watching the workforce challenges, the impact on mental health, both from our caregiver provider, but also from the population. It's created an enormous number of challenges. Technology has to be part of the solution. The only thing we need to remind everybody is sometimes these technology solutions like telehealth still involve the human labor component of it as well. So that shortage is something that ultimately we need to address, but we've got to figure out how we use technology. And I think, how does technology start to help in the productivity side of healthcare? It's actually one of the industries that, if you look at over the last 10 years, hasn't had huge advances in productivity. They've made massive investments in technology, certainly with the electronic medical record. And sitting in the provider side, a lot of those have actually added to the workload as opposed to making it more efficient. But I think that's because a lot of that was still new and was still evolving. And I think we're finally getting to a point where there's opportunity to start to leverage many of these. We've basically digitized what used to be a paper chart through the electronic medical record. And those data elements, how do we actually start to better use them and tie them together? And I think from at least watching the healthcare provider side, there's still an evolution that's occurring here of those that are mature in their data infrastructure and those that aren't. And I mention that because when we start talking about leveraging technology, it's that data that's critically important. It's that connective piece that allows that to work, even in a telehealth environment as well. So I think we're going to start to see more of that maturity over the next few years. And it's one of the things that, as I've come in here to MMO and been working with the team and working on strategy, it's how do we find these partnerships where we can leverage technology to help us solve for some of these challenges that we have. You know, a great example of that is wellness, you know, and how do we, you know, catch the patient sooner and the journey. You know, so often we catch them when they show up in the ER, when they're making that phone call to their physician where they are sick, as opposed to how do we connect that. And I think, you know, from a wellness perspective, MMO acquired a company actually locally here in Cleveland, Bravo Health, several years ago. They've incorporated that into their product offerings. But I think we have to look at additional partnerships as how we start to create that connective tissue with our membership that's out there, as well as between the multiple different providers that are out there as well. And I think this starts to get into one of the challenges is how does technology help with navigation in healthcare as well?
Terrific. Well, as we shift to the last question, I'll note that Medical Mutual has been a very valuable partner for North Coast over the past several years. We have a number of our investors are current or former executives at the company. A number of our portfolio companies have partnered over the years, and that engagement in the landscape is powerful. I might ask, as you step into this still somewhat new role, what your view is for how MMO might engage the broader entrepreneurial community in Cleveland and beyond.
Yeah, it's something I'm very interested in exploring. And again, coming from the clinic down the street, we see incredible resources here in Northeast Ohio. It's not just the clinic. You've got university hospitals, you've got Case Western, we've got, you know, great schools, great healthcare, and we have this ecosystem that's out there. And how do we all start to come together and work together? And if we do this in the right way, we attract more into that ecosystem as well. And I think MMO needs to be a participant in that. And as I'm looking for solutions to help us figure out how to better serve our members, I absolutely want to figure out how to plug into those ecosystems to see if those partners are right here in our own community.
Well, Steve, I thank you for joining us for the Fireside Chat this year. We appreciate your engagement and that of MMO. And I'll take a moment to also thank the members of North Coast Ventures, all the portfolio companies, those that presented tonight, and those that are working every day to build great companies. And lastly, to thank Thompson Hine, our sponsor for the annual meeting. We appreciate you being with us and look forward to a great 2023.